Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the Australian dollar's volatile session on the back of a surprise Q2 GDP beat at 0.6% quarter, its fastest pace in 2 years, RBA cut bets have eased somewhat, but the sentiment remains tied to this Friday's non-farm payrolls. Consensus sits at 75,000 jobs added after July's 73,000 jobs added was somewhat disappointing, with employment expected to rise around 4.3%. A miss would reinforce Fed easing bets, weakening the US, and could drive the Australian dollar towards 66 cents. However, a stronger print, that is above 120,000, say, could drag the Aussie back to 65 cents or even slightly lower to around 64.80. Overall, though, do keep an eye on the US labour data when it lands, because it will determine the next direction, as the RSI is somewhat a little bit to the firmer case. The 60-day simple moving average holding, I do favour the upside, but let's see how it turns out. Moving on to the euro, the market is also a little bit firmer as the dollar weakens, but overall, let's see if the technicals can remain in this pattern, and if so, we're looking up towards 118 as a potential target. Dollar yen still favouring the downside to 146 and even lower to around 145 as the technicals remain buckled and weak to the MACD, which does favour the move down. Wrapping up with sterling and commodities, the market is improving for sterling and looking to, with the RSI rallying, could see a move that is to the target somewhere around 135 to 135 and a half. Commodities is putting in the best week it's seen for a long time as this trend impressively holds and likely to, and if so, could see a rise up towards the region of 3,570, 80 area where it recently printed an all-time high. Let's see if the market can pull back just a teeny bit, that is, and remain somewhat where it is with the RSI confirming the next move up. And a little bit weaker when it comes to oil, as all eyes look to the OPEC meeting over the weekend, where producers may accelerate unwinding cuts, bringing the barrels back into the market sooner than expected. Overall, though, the base is expected to hold around 62.5. Let's see if we can get a bounce from there and rally on back to 65. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great starts on the new weekend.